Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
Jim, we're going to talk a bit about whether or not $3,500 gold was enough to get people excited about gold companies. We're going to update on what Sunrise Energy was halted for, and we're going to talk about two recent graduates from the bottom fish collection to the favorites collection.
Did gold at $3,500 ignite the gold juniors?
The market started to really perk up the first couple days of this week. Vista Gold Corp is my proxy. It is not yet a producer. The producers have been doing very well so far this year. Vista Gold has a project, Mount Todd, in Australia that's permit ready. A feasibility study was done for 50,000 ton per day operation. And the stock has been below $1 US for forever, and it had a couple of the best trading days since mid-2021, and it even broke $1 for a brief period, touching at $1.04. It has since retreated back below $1, but given that the project has a valuation of only $126 million US right now for a project that's going to cost $1 billion to develop, and which at the $3,300 price that gold was at on Thursday has a net present value ranging from $3.5 billion at a 10% discount rate to $5.3 billion at a 5% discount rate, which converts into a price range of $26 to $40. It's kind of insane that this stock is still sitting there just hanging around $1 with a fraction of the value that if you took gold at $3,300 seriously and accepted costs as what they are today, this stock should be roaring away right now. So obviously this has not yet happened. Now we did see the gold producers, they are now up getting pretty close to the gold index that I created, gold producer index that I created at the start of 2020. Agnico Eagle is now just beneath the gold index in terms of performance, but this year it is up 47% compared to 8.8% for gold. So the market is starting to embrace the producers. But when you go down the food chain, that's where the big money is to be made. Now, there was an interesting thing that happened this week with gold closing at 3,433 in London and touching 3,500 during the day trading. The GLD ETF, it now has the highest value ever, about $101 billion. Which is much bigger than it was back in that period, 2010 to 2012. But its volume traded is still relatively small compared to that period. And this past week, when gold was making new highs, it even managed to lose ounces. So the general market is not really embracing the idea that gold here at $3,300 is a big thing. Now, all gold needs to do is just stall here and do nothing and let the market accept that this is the new reality for gold. And the reason this is important is when gold peaked at $850 in 1980, if you inflation adjust that to the present, the number is $3,351. Now, after gold ran up to that level, it settled back to $400 and then for the next 25 years, basically oscillated between $250 and $500 before breaking out during the 2000s, during the China super cycle, and ultimately spurred substantially higher by the 2008 financial crisis. But right now, this $3,300 price, when you use $400 as the base price in 1980, inflation adjusted, that should be about 1,577. The current price is over 1% higher. Now, if gold is supposed to track inflation, it has outperformed inflation. This is a real price gain. And if it shoots above $3,500, then or goes to 3,500 or higher, that's going into uncharted territory in terms of the real value for gold. So meanwhile, however, this week was a very strong week for Bitcoin. And the Bitcoin's now the new sort of proxy for fiat currency debasement. And fiat currency debasement was the story for the last 50 years about gold. You're supposed to own gold because when they debase the currency, the gold price is going to have to go up. Now, gold is physical. There's $22 trillion worth of gold in existence right now, 6.7 billion ounces in terms of the above ground gold stock, and a pittance, $100 billion worth of that, less than 1%, sits inside the GLD as a form that can be readily traded. All that above ground physical gold has a lot of inertia. To try and sell it, the logistics are painful, they're slow. So although theoretically all this gold is for sale at the right price, it's not going to be liquidated in a heartbeat. In contrast, Bitcoin, all 1.9 or 19 million Bitcoin that are in existence, they have about a $1.9 trillion right now. Every one of those coins could hit the bid with a few keystrokes, somebody saying, I want out of this. So Bitcoin could overnight undergo a flash crash that reflects the reality of itself. It's not the case that a fraction of the gold is suddenly hitting the bid that's in the market and it has a flash crash and then everybody rushes in and buys and bounces back. If Bitcoin ever were to undergo a major flash crash, who would buy Bitcoin? But the Bitcoin, it refers only to itself. And as the new fiat currency debasement hedge, yes, that's wonderful. But what we're talking about today is not fiat currency debasement. We are talking about the debasement of the American brand through the policy the Trump administration is pursuing. And gold is a bridge away from U.S. Debt, the U.S. dollar. When people want to get rid of dollars and T-bills and all that, it's not so clear where that is supposed to go. Yeah, they can go buy overpriced stocks like Tesla and the other magnificent knee benders, but those could end up being dumped by the other shareholders and could end up not being worth much anyways, especially when some of the consequences of these tariff policies start to manifest themselves in terms of a recession, people withdrawing from buying stuff, the advertising revenues is drying up. So the Bitcoin in that, it's really just reflecting the dollar itself. So it's not a hedge against the American brand debasement. Who cares if Bitcoin goes to the moon, goes to $1 million, because Trump has decided that he is going to debase the currency by printing an unlimited number of dollars to pay for everything. But that's different from the world withdrawing from American assets and saying, we're going to be doing without you going forward. You're unreliable. You're not trustworthy. You want to throw Ukraine to Russia. Your big response is to say, bad Vlad, you're being bad. Stop doing this. Listen to me and just accept that I'll give you most of Ukraine, and then we'll never let them into NATO. All these things, he's not going to end up getting his way. He's going to look foolish. China is standing tough on its stance with regard to the tariff war. So this problem, at this point, irreversible. And what can an ordinary individual do? Well, you can buy something like Vista Gold. There is no real leveraged way to buy a Bitcoin. Bitcoin is just Bitcoin. It's whatever it is that somebody's willing to pay for it. But with Vista Gold, if gold is this independent asset class, not controlled by any government, and it's going up in real price terms, as such as I just described, up 100% from its inflation-adjusted $400 base, and now in even going higher than the peak from 1980, it's taking fixed costs that are not rising as fast as the price of this commodity and putting it into production. That's what a story like Vista Gold Corp is all about. And right now, if gold sinks back to $2,500, well, the project's still in the money. In fact, ironically, gold pulling back into the $2,500 to $3,000 range might actually be what does ignite a bull market in the gold juniors that have ounces in the ground or excellent targets, which at $2,500 to $3,000 gold require a much lower grade than when gold was hovering between $1,500 and $2,000 an ounce. So I'm recommending people, if you want any exposure to gold, don't bother with gold itself. That could lose $500-700. It could gain $700 from here. It's the Vista Gold, which has not reflected this substantial move in the past year, whose downside is limited if gold retreats. Gold would need to collapse below $1,800 for Vista Gold's Mount Todd project to end up being marginal again. So buy this one, put it aside, and be prepared for when the ignition truly happens for a stock like this to blast through dollar and then end up in the $10 to $20 per share range, where all the other companies are the producers, and that also have benefited because they have operating mines with fixed sunk capex, and their opex is not rising the same degree that gold is. They will be flowing a huge amount of cash and will be in excellent position to grab companies like Vista Gold and put these projects into production. And I am told that the smaller scale 15,000 ton per day feasibility study should be available by mid-July, and that opens up the company to potential acquisition by mid-tier producers who at this point can't justify a $1 billion capex, but could justify a smaller one based on a 15,000 ton per day mining scenario.
What was Sunrise Energy's big news?
Well, last week the stock was halted on Wednesday. It had run to 71 cents. In the prior week, it had been sort of stuck in the 20 to 30 cents for most of this year. And there was a lot of speculation that there was some important news coming, perhaps a meaningful offtake agreement. Some were even wondering if there was a buyout of sorts coming. Well, when trading resumed on Tuesday, the news was that the company was doing a private placement of 20 million units at 30 cents to raise $6 million. And as part of this, they are doing this thing in Australia that they call a special type of, so it's not like a rights offering. It's similar, but each shareholder who's resident in Australia and New Zealand will be given the right to buy $5,000 worth of units, up to $1.5 million. So that's about 5 million extra units, which would bring the whole thing up to $7.5 million. Now, the stock, of course, tanked when it resumed trading. It was at one point down to 41 cents. It's climbed back to 50 cents. And the question is, why did the stock run to 70 cents? This private placement, Robert Friedland himself is taking down 10 million units, and most of the rest is coming from so-called cornerstone investors. They did not disclose whether these are new investors. The second biggest shareholder is the Chinese company Pengjin International, which used to own just under 12%. I'm not sure if they still do own that. Having them buy more stock probably isn't a good idea when China is now banning the export of scandium. It would be better to have them ride into the sunset. the people on hot copper were not particularly happy at this run-up. This type of deal where basically insiders, key people, are doing the financing at a low price could have been announced a week ago rather than let the stock run to 70 cents. So this is a bit of some bad will that has been created that needs to be digested. The money is going to go towards completing the feasibility study. But they also, at the bottom of the press release, they said that it will also go into researching a potential metallization facility in the United States to provide high purity scandium for the semiconductor industry. So that strikes me as this might be linked to a bigger deal down the road where a very specialized use of scandium that goes beyond putting it into aluminum or making the ceramics not break down so quickly in the Bloom Energy solid oxide fuel cells. There may still be something in the background, and the run to 70 cents may have been premature and turned into a bit of an embarrassment to Friedland, who will have been trying to figure out, okay, how are we going to fund this thing? So the company's now funded. The extra 50 million shares from both the warrants, the full warrant, and the shares, that'll bring fully diluted up to 145 million shares. But with the money in place and Friedland boosting his stake and perhaps some new backers coming in that might play a role down the road, Sunrise Energy Metals is still looking good for the future. But for the next couple of months, while we wait for that special meeting on June 6th to happen, and then it'll be like 10 days or so for it to close it, the stock will probably track sideways during this period.
Why did you graduate Quartz Mountain from bottom fish to a favorite?
I've had Quartz Mountain resources in the bottom fish collection for the past few years, based on the fact that Bob Dickinson has become a substantial shareholder in this company. He has been accumulating projects in British Columbia. The one that intrigues me the most is what he now calls the Maestro Project. It hosts a former Lone Pine moly deposit, which Bard Ventures explored during that moly mania cycle of 2008 to 2011. It only has about 110 million tons of 0.08% molybdenum. It's too small and low grade to be a standalone deposit. And when the prices of molybdenum crashed after 2011, it essentially became worthless. The Bard Ventures itself changed its name, rolled back its stock, and underwent a change of control, went somewhere else, and Eugene Boitman ended up with the Lone Pine Project as some sort of consolation prize because they didn't want it. Bob Dickinson through Quartz Mountain wanted to buy the whole thing, but that didn't really work. Eugene wanted too much for the deposit in the middle, which was a separate mining lease. So Quartz Mountain simply bought all the surrounding land, and Bob's focus wasn't really the moly deposit. It really was a peripheral system, an intermediate sulfidation epithermal system where past drilling had intersected gold and silver values, but it had never really hung together, so it just looked sporadic, not very good. Bob had an idea of what could be done with this, and he was in a bit of a waiting game with Eugene, hoping that he would eventually sell. Well, something else happened. For some reason, the mining lease was let lapse, and before Bob could pounce on it, Tim Termunde's Eagle Plains Resources literally swooped out of the sky like some sort of eagle and snatched it away. They have a big staking machine. They monitor for these projects claims when they come open, if they're interesting, and there's always a precise time when they become available for online staking. So they have a bank of computers all poised to just hammer away submitting applications, and they managed to scoop this, which probably did not please Bob very much, but he was able to do a deal early last year, and acquire it from Eagle Plains for 750,000 shares and a royalty. So he now owns the whole the whole package. And last year, they did a drill program, 2 scissor holes, which turned out to be critical to understanding whether or not this Prodigy zone has upside potential. They got a very good intersection of gold and silver in one of the holes. And what they learned was the direction and dip of the mineralizing controls within this Prodigy trend, which is at least a kilometer long and 500 meters wide. And they realized that the reason these vertical holes drilled in the past had these results is they weren't really drilled perpendicular to the mineralizing fabric of this system. So at the start of April, they announced that they had begun drilling. There's a set of 8 holes, 4 sets, 2 angled holes on each line that's going to test this at least a 500 meter segment of this to see if they can, if this hypothesis about the orientation of the mineralization is correct. And there are 2 potential outcomes. One is a underground mineable high grade lode gold silver vein system, and the other one is the bulk tonnage scenario similar to the Blackwater deposit that New Gold had acquired when it took over Richfield and SilverQuest about more than 10 years ago, but which then Artemis Gold acquired from New Gold about 5 years ago and has put into production. And this is a low-grade bulk tonnage system, sort of roughly 1,500 meters by 500 meters, over 8 million ounces gold, 60 million ounces silver. This is sort of the dream outcome that Bob Dickinson is hoping for at the Maestro project of Quartz Mountain. And of course, we've known this for probably the last 8 months. The big change that promoted this from a bottom fish to the favorites collection was that in February he hooked up with a San Diego financier who's had a good track record in financing companies that end up being reasonably successful. And so the company raised $4.2 million with a unit at 42 cents, 10 million units. There's a half warrant attached, only good for a year, and even worse, it has an acceleration clause where there's early expiry if the stock trades over a dollar level for 10 days or more. So that put money into the bank on top of the $1 million that was left over from last year's raise. Bob himself and the largest shareholders of the Sutton Group, they took down a small portion of this financing. The project's now financing. A drill program started in early April. They should have some idea of what the visuals look like with this type of system. You need assays to find out what it actually is all about. So by mid-May, we should be in a position to start seeing results, and we have 2 potential outcomes for this Prodigy story. And even if this turns out to be a disappointment, there is still the Jake project, which Quartz Mountain also acquired back around the time the Maestro project was acquired. And it is a copper gold project farther north in British Columbia, where they did drilling last year that intersected copper gold mineralization. It wasn't really high grade enough to get anybody excited, but it confirmed that yes, this area is fertile for copper gold porphyry systems. So that's not their focus now, but that is the plan B to which they could turn their attention later in the year if for some reason the Prodigy turns out not to deliver the major gold silver discovery, either as a bulk tonnage scenario or an underground high grade scenario that everybody's hoping this program will confirm over the next 6 to 8 weeks.
Why did you graduate Trifecta Gold from bottom fish to favorite?
Trifecta Gold, its big missing piece was money. Last year around now, they did a deal, reorganized themselves, and acquired all the reduced intrusion related gold system type prospects that Strategic Metals had assembled over the past decade in the Yukon. And of course, these are hot right now because Snowline's Valley discovery demonstrated that these types of deposits run 1 to 3 gram per ton in Yukon. Before that, all the excitement was on the Alaska side with deposits like Fort Knox and the Pogo deposit, which is an underground mineable high-grade system of this style of deposit. Well, now we know the Yukon is going to has similar potential, and we've seen Sitka Gold, which this past week also released good assays for the first hole drilled on the RC project, which is west of the Keno Hill district, and that's also showing better grades than what that deposit was originally understood to be all about. But Mount Hinton was a property to the east that has been part of the Strategic Metals control for some time. In the past decade, $5.5 million has been spent drilling these vein structures that were actually found many decades ago when the Keno Hill district was first being explored. Keno Hill, of course, is about these very high-grade silver, zinc, lead zones within these fault structures, and over 200 million ounces have been mined. And Hecla bought this out because they realized, well, this doesn't fizzle out at depth and just become zinc lead enriched. The silver persists. So it acquired Alexco a couple of years ago, and it's putting this back and trying to get it back to full capacity production. And the project, the Northwest corridor vein structures to the east, they are have a higher gold value than a silver value. And that was the reason it was ignored in the past. But now there's this new idea that Craig Hart and his associates have put together this model of how these reduced intrusion-related gold systems work. And the high-grade silver veins are believed to be the most distal part of these big intrusive complexes that push these fluids all over through the surrounding area. And these gold-enriched veins, they're closer to the Pluton. The only problem with Mount Hinton is that there's never been any evidence of an intrusive body to the east that could have driven this system. It's mainly just the quartzites that host both the gold vein structures and the Keno Hill deposits. And then there's this big valley. Well, when Trifecta took on this project last year, they only managed to get one hole drilled, and most of the rest of the work was sort of mapping and prospecting. But they did this ZTEM survey over the property, and they were sort of just curious because they had found some granite boulders in the valley. So here was evidence of granite, and sort of perversely this thing is called Granite Creek Basin, even though there's no outcropping granite, igneous rock. But the area has all these placer operations, and a road was put into there about a decade ago, so it was much more accessible. But the valley itself was just covered with overburden and nothing really outcropping. So when they did this survey, they were quite surprised to discover this very large geophysical anomaly whose most plausible interpretation is that this is an intrusive body, and that the granite boulders that they found may have been somehow, frost heaved and moved up to the surface. And this now puts the whole model together that, hey, maybe there is an intrusion here that developed this sheeted vein system, typical, a lot like similar to the Snowline's Valley system, but because it's going to be required, it's going to be a blind target with no guarantee that there's any gold in it. It's going to be expensive. So the big missing piece was money. They had maybe several $100,000 left, and it was on the bottom fish collection because they've got this great story. They have other projects elsewhere in the Yukon and the Tombstone Gold Belt that are of this reduced intrusion-related gold system style potential, all picked up based on regional arsenic anomalies, which Doug Eaton's group, they would find these and check it out and stake these things when nobody really cared about it. But this past week, they finally got a lucky break. They announced a $5.3 million unit of financing. That's part of its charity flow through. That the charity part's being done at 38 cents. And then there's also a small hard component being done at 27%. And Crescat Capital, which has a good nose for interesting exploration plays, they have come on board for 9.9%. That prompted the Condire Investors, which is a shareholder of both Strategic Metals and Trifecta, to increase its stake to 19.9%. And apparently there's also a mystery investor who wasn't part of the Crescat group, but was very interested in this play, and they also came in for 9.9%. So all of a sudden, from the weekend before, when Richard Drexler was sort of struggling to try and get the money, because June's not that far down the road, and they do have permits and stuff like that, so they don't have to worry about that. Without money, you can't do anything. So when I saw that financing came through, I said, okay, now this company is in a position to drill this target. If it turns out to be a gold mineralized intrusion, that could be potentially huge. That's plan A. Plan B is they can start doing more work on those vein structures and see where they all go along strike, down dip. That's not the preferred outcome. The preferred outcome is that there is a blind, major a reduced intrusion-related gold system deposit, perhaps similar to that of Snowline, and that becomes in the new focus. It's in an area where you could theoretically access it all year. It's road accessible. It doesn't have to be helicopter supported. So I moved it up to the favorites collection this week. And a new thing that I've decided to start doing is, rather than ramble on here in these audio interviews, I'm also starting to write up these companies as part of my Kaiser Research online platform, and also posting them to Substack on a restricted basis for the Substack subscribers only. It only costs them $10 a month to get access to all this. And what I've done is I've published both the Quartz Mountain and the Trifecta write-ups. The synopsis is unrestricted. It's a free preview. You can see that. But the rest of the guts that explain how the story works along with the graphics, that is behind the paywall. But even if you just want to see the synopsis, I recommend everybody sign up to Substack, get the at least free access so that you get the emails when I publish something to it. This is going to be my new platform to target a much bigger audience. I'm looking for younger generations, the Gen Z, the millennials who know nothing about this sector. So I've decided to make this cheap. $10 a month or $100 a year. Inflation adjusted, that's actually half the $99 I used to charge back in the 90s for the Kaiser bottom fishing report. And Quartz Mountain and Trifecta both have high impact stories. So check it out, get on the list, bite with the subscription if you feel it's worth it. But these are exploration stories where it doesn't matter if gold tanks back to $2,000. We're looking for a discovery that works even at prices back below $2,000.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.